Good afternoon. This is Ken Long at Tortoise Capital with a review of the daily trading report for July 17th, 2019, day 3 in the live trading workshop. Market health check. We had the second day of rejection of the swing high, slightly wider range downward today. Had one moment of volatility pressure that paid off in VXX, but the market stabilized and still held above the northern skin of the dragon, which has just about reached the 12 o'clock position, as you can see, starting to roll over. We are in the fall seasons of MACD histogram, near the top of the 10-day and the 30-day trading range. Market is in bullish, quiet conditions. Sure it is. Overbought on an annual basis at the high end of neutral on the 10-day at NDX at 78. Risk index remains risk on with a reading of 1.119. When we compute the risk C, that comes in at 1.21. So still an exaggerated risk C, meaning near the end of a swing trade range than the beginning. You can see the 90-day histogram rolling over at just around one standard deviation. So that means to be prepared for sudden volatility shocks. We saw the first hint of one today. We had 3 positions into VXX and cash to win. There was no additional follow through, but that was the first scare that we've seen probably in 3 weeks. So the downside risk is certainly there. No signals in channeling an overreaction, and you can see the usual suspects under the 10-day max pain remains those healthcare consumer staples guys like Johnson & Johnson, Merck, and Pfizer. Energy sector was again weak, so you see Devon Energy and natural gas at the top of the max pains in their portfolios, along with oil producers and explorers there, and oil itself with USO. Dow Tactical Summary, handful of dojis, and overreaction short still in 3M. 3 symbols firing on the auto framer at Merck, Johnson & Johnson, and Pfizer. And handful of fraud quality numbers greater than 3. We had breakouts to the upside today in 3M, IBM, Goldman. Procter & Gamble has just been excellent. ETF Tactical Summary, 5 symbols testing out better than 2-to-1 on the auto framer, including Treasuries, Japan, Healthcare Europe, and EAFE. Had a breakout today in silver. It was massive goodness in wheat and precious metals, which is a nice way to play almost a leveraged approach to silver and gold. But with a liquid stock that has tight spreads. So our logic chain helps us find those. Pinch and stretch, the usual suspects. United Health has been excellent. Goldman is still extended. Some new symbols appear in the super pinch. Mexico, Utilities, Cisco, Pfizer, EFA, Chevron, and Coke. Chevron had some nice hybrid frog moves this morning leading into an owl and then a retracement. So that is certainly tradable. Coca-Cola had a few tradable moments today on a range expansion from the Z3 pinch boxes. So lots to choose from there. I'm going to take a look at the regression line fractal framework. We have it's mostly the high relative strength symbols that have the large multiples of ATR that are tradable. Many of the same symbols we saw yesterday. In the daily squeeze, many to choose from, and so when the market is in that bullish, quiet condition, it's not surprising to see a lot of good quality symbols in there. I'm looking at Merck, Raytheon, Home Depot, Disney, it's a Bank of America, excuse me. or Boeing, pardon me. Walgreens. The spring report on the left-hand side here shows all of the symbols among the various portfolios we track that are in spring conditions for the MACD histogram, the 4 seasons, and the Z-score that we've developed to help us calibrate where they are in that life cycle. Some interesting ones to choose from. Raytheon, Lilly moved out of that today. And that was on yesterday's report, turned out to be very tradable today. SPG was on the list yesterday, and that was very tradable today, and that's now being added to my portfolio of permanent friends. In the MACD 4 seasons for the ETF 30, still a ton are in the fall, a handful in the summer, only one in the winter, which is Mexico, and none in the spring. So we have a market that is still mostly rolling over, and so our caution to the downside. You can see the first little hint of weakness there as price trades below the 30-day regression line. You can see the slope of the slope stat rolling over at Z+1. That has always been a heads up for a potential turning point on the swing trade basis. When we zoom in, you can see a little closer. The blue line is the moving regression line slope. The 10-period moving average of that is the black line. And so when you see that crossover, I want you to think of that like a P1 in the RLCO. And when that happens more than one SD from the long-term average, which is the black line, then that is an alert for a potential turning point. You'll notice on the right-hand side there, charts 2 and 4 will show you that those turning points have always in the past signaled a change in market condition or short-term conditions, so we're mindful of that. The last thing I'm going to look at is the Z-scores of the 3 regression line slopes. You'll notice on the bottom chart that price has come back to the edge of the river, which is the green line. Still sloping up, but it has rolled over and is finding an important critical state here. Will it hold at the edge of the river and continue, or is this it? You see the slope of the 90 now has come down to the 0 line on the Z-score. Still sloping up, but you can see it's starting to weaken ever so slightly. The 10 has rolled over, the 30 has rolled over after a 2 sigma upward move. So again, this is a market that feels full, and now we'll see to what extent will the bull market in the upward sloping river continue to support. So that's everything we want to cover today. We have lots of continuation patterns and usual suspects to prepare for tomorrow. This is a short-term trader's market, getting the market correct first and then finding the movers. So lately it has been metals and mining, energy and finance have been the sectors that really are following through. In the second tier, technology has been trying hard to move up, but there's some headwinds, it feels like. So that's the news from the workshop. You guys keep your risk measured and your powder dry.